Ever wondered what truly fuels a company accelerating through a disruptive market? Kind of, carving out its niche. Today, we're pulling back the curtain on Ather Energy Limited's Q1 FY26 financial results. It's quite a story of aggressive growth and strategic pivots. We've sifted through financial reports, press releases, and yeah, even their latest earnings call to bring you the essential insights. Our mission really is to give you a true shortcut to being deeply informed about this key player in India's electric two-wheeler market.
Yeah, what's fascinating here is, we're looking at a company that's still pretty young in its life as a listed entity. This is only their second earnings call, I believe. But they're clearly making significant strides, big moves. Ather's foundational bets, they've always been on two key things: premiumization within the industry and a really strong commitment to R&D and technology investment.
That R&D point seems crucial.
Absolutely. It's no small thing that almost half their workforce is dedicated to R&D. And they've already filed, what, 417 patents?
Yeah.
That's a very clear signal of their long-term vision, where they expect to win.
Okay, let's unpack those headline numbers then. From Ather Energy's first quarter of the 2026 financial year, the one ending June 30, 2025, what immediately leaps out at you when you look at those figures?
Well, the core financials are certainly eye-catching. Volume first, 46,078 units sold. That's a striking 97% year-on-year increase.
Wow, nearly double.
Exactly. And what's even more impressive about that growth is that it happened despite, the typical seasonal dip the industry often sees going from Q4 to Q1.
Right, that transition period.
Precisely. Their total income also saw a big jump. It's 672.9 crore, which is up 83% year-on-year. But here's where it gets really interesting. Their adjusted gross margin, or AGM, it hit 154.8 crore.
And how does that translate percentage-wise?
That's a phenomenal 117% year-on-year jump, reaching 23% of total income. And just to put that in perspective, even without government incentives, the AGM was still 20%. That's a 700 basis point improvement year-on-year.
So a 7 percentage point increase? That's significant.
Very significant. And crucially, their EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization, gives a clearer picture of operational profitability.
Yeah.
It improved dramatically to minus 16%. That's a massive 1,700 basis point improvement year-on-year.
17 percentage points better on EBITDA margin, so narrowing losses.
Exactly, narrowing their EBITDA losses to 106.0 crores, and losses after tax also narrowed, down to 178.2 crore.
Those numbers are certainly impressive, especially that volume growth against the seasonal trend. But in a competitive market like India, how did that actually translate into their standing? Are they just riding a rising EV tide, or are they genuinely taking share?
Oh, they absolutely are carving out a bigger piece. Their national market share rose to 14.3% in Q1 FY26. That's up from 7.6% just a year ago in Q1 FY25. And it's even an increase from the last quarter, Q4 FY25, where they were at 13.6%.
Okay, so sequential growth too. Where are they seeing the most success?
Well, South India remains their stronghold. Ather retained leadership there, hitting 22.8% market share. They actually became the #1 player by volume for the whole quarter.
Number one. It's big.
It is. It seems like they've really figured out the pulse of that market. The Atherista, their family scooter, seems to be resonating strongly with consumers there. Then if you look at Middle India, their market share grew 2.6 times year-on-year. It's now at 10.7%.
So it's 6 times. What's driving that?
It seems to be largely driven by rapid retail expansion. Think states like Gujarat, Maharashtra, MP, Chhattisgarh, Odisha. They're opening stores fast. And then in the rest of India, market share grew 1.9 times year-on-year to 7.4%. That's laying crucial groundwork for future growth, especially in those really large zones like Rajasthan, Uttar Pradesh, Bihar. So yeah, definitely gaining at competitors' expense.
Okay, let's circle back to that massive 117% jump in gross margin. That's truly eye-popping. And frankly, a bit puzzling when you remember that government subsidies for EVs actually came down by around €5,000. So the big question is, how on earth did they manage to pull that off? What's the secret sauce there?
Yeah, it's a really impressive story, and it's definitely a multi-pronged approach. It's not just one thing. First, there's that sustained focus on R&D-led value engineering, plus a deliberate product portfolio skewed towards their premium offerings, like the Atherista.
So optimizing costs through innovation, basically.
Exactly. Second, they did benefit from favorable commodity costs, particularly for battery cells.
Yeah.
That helped. Third, and this is quite important, non-vehicle revenue. It contributed a significant 12% of their total income, and this segment typically commands higher margins.
Non-vehicle revenue, what does that include?
It includes things like their software subscription, Ather Pro. It has an impressive 89% attach rate.
89%. So almost 9 out of 10 buyers are opting in.
That's right. It also includes accessories like the Ather Halo Smart Helmet and service revenue. They're also starting to see some monetization from their charging infrastructure. All of this together helped to reduce their cost of goods. Sold basically what it costs them to make each scooter by almost 7% compared to the average last year, FY25.
Okay, cost down, non-vehicle revenue up. What about the actual price customers paid?
Well, that's the final piece. Their average selling prices, or ASPs, held up favorably despite that subsidy reduction. And that really speaks volumes about their brand strength, those strong software attach rates we mentioned, and that premium product SKU.
So it's not just one factor, but a combination of R&D, commodity timing, diversifying revenue, and brand power.
Precisely. What this multi-pronged approach really reveals is Ather's intentional shift towards building a more sustainable, resilient business model. It's not just about, one-off gains from commodity prices. They're strategically diversifying revenue and leveraging that R&D to drive both efficiency and premiumization. That feels like the real game changer for their long-term profitability, even as market dynamics inevitably shift.
This sustained focus on R&D, it's clearly paying off in terms of patents and product innovation, like you said. But R&D is also a huge capital investment, right? Especially for a relatively young company. Are they balancing that investment strategically? Could it become a drain if not managed carefully? And what else are they doing to strengthen their whole ecosystem beyond just selling the vehicles themselves?
That's a great point about balancing investment, and their approach does suggest a strategic long game. Their ecosystem development is pretty robust and integrated. Take charging infrastructure, they added almost 400 new charging points just in Q1. That brings their total to over 4,000 points, 4,032, across India, Nepal, and Sri Lanka.
400 in a quarter? So they're serious about building that out.
Very serious. It's not just about selling scooters. It's about building the infrastructure that makes EV ownership easy, seamless. Retail expansion is also really aggressive. They added 95 new experience centers, or ECs, in Q1 FY26. That brings the nationwide total to 446.
Okay, and are these all the same kind of large showrooms?
No, and that's part of the strategy. They've implemented tailored retail formats, flagship, mid-size, and compact. These are specifically designed to lower the break-even volumes for their partners and improve efficiency. So that directly addresses your point about balancing investment. It's smarter expansion.
Makes sense. And the R&D spending itself?
Still significant. They spent $890 million in Q1 FY26. And with, like we said, 45% of their total employees in R&D, it really underpins that strong patent portfolio, 417 cumulative patents now. It ensures they're building future products on a really strong technological foundation.
That brings us neatly to the future then. As a company in such a fast-moving, rapidly evolving market, what strategic moves are they making to stay ahead of the curve? And, what are the big challenges they're navigating right now?
Well, a significant challenge they're tackling head-on is the rare earth magnets issue, especially given China's export ban on heavy rare earth magnets.
Right. That's been in the news. How are they handling it?
They're exploring multiple options. One is partly assembling motors in China. Another, which they seem more optimistic about, is moving to heavy rare earth-free magnets. They're also considering ferrite as an alternative. The absolute goal here is zero performance impact for the customer. Right now, they're saying there's only a small temporary cost impact. There might be a short-term business impact, maybe 7-10 days in Q2 due to a supply gap getting the new parts in. But they expect existing channel inventory to help soften any retail impact.
Okay, managing the supply chain. What about new stuff coming down the pipeline?
Big things planned. August 30th is their community day. They're set to unveil Ather 7.0. That's their next-gen software. And, critically, they're unveiling the EL platform, this brand new scooter platform.
EL platform. What's the focus there?
Designed for cost and scalability. The aim is to launch more accessibly priced products. Manufacturing for this EL platform will be from a new, more vertically integrated facility. They're calling it Factory 3.0.
Factory 3.0, where's that and when's it coming online?
The expansion is in Aurangabad. It's on track, targeting go live next year. And there are associated incentives with that plant, like a significant capital subsidy over 7 years and a 2.5% GST uptake for 15 years for vehicles sold out of the state. So that helps the economics.
Got it. Any other product developments, like different battery types?
Yes, LFP battery packs, that's lithium iron phosphate, known for being safer and potentially more cost-effective. Those already live in some products. Their financial impact should become more visible in Q2 and Q3 reports as their contribution to the sales mix grows.
It sounds like they're really focused on the entire life cycle product: cost, manufacturing, software, charging, after sales. What about expanding the product line beyond scooters? Any talk of motorcycles?
They are working on something called the Zenith platform. This is for mid-performance motorcycles, I think the 150, 180cc equivalent range. But this is definitely a long-term priority. It comes after they really solidify their scooter dominance. It's not expected this year.
Okay, scooters first. So how are they planning to win over more scooter buyers, especially those who haven't bought an EV yet?
Right, their immediate customer conversion strategy is now focusing on what they call the mainstream customers. This represents a massive chunk of the market opportunity, maybe 20% to 60%. Their Althard Advantage campaign is pivoting its communication. It's moving towards assurance and comfort, specifically addressing concerns about battery life, safety, service, and resale value.
Tackling those common EV anxieties head on.
Exactly. And interestingly, it might sound counterintuitive, but they actually see the entry of major traditional two-wheeler manufacturers, like the big Japanese brands, into the EV space as a positive.
A positive? How so?
They believe it drives significant awareness and consideration for EVs in general, which ultimately benefits pure-play EV brands like Ather. It legitimizes the category faster. Supply chain de-risking is also a really high priority. Lots of effort on hedging, ensuring alternates at both country and supplier levels. They say the vast majority of their materials are already dual or triple sourced.
Building resilience there. What about regulations? Anything coming up?
Yes, the upcoming mandatory ABS requirement. Ather feels they are very well placed for this. Why? Because they already have front disc brakes across their entire portfolio, and their higher average selling prices mean the added cost of ABS is a smaller percentage. They're actually quite bullish on safety becoming a key selection criterion for buyers, which plays right back into their premiumization strategy.
Okay, so to kind of wrap things up, the key takeaways seem to be: Ather Energy is showing really strong volume and margin growth. Check. Aggressive expansion in retail and charging networks. Check. Significant ongoing investment in future-proofing through R&D. Check. And they're doing all this while actively navigating supply chain challenges and shifting market dynamics. It shows real strategic depth.
Yeah, exactly. And if we connect this to the bigger picture, Ather's strategy, combining these premium products with an expanding ecosystem and a strong R&D base,
Yeah.
it positions them quite uniquely. They're not just selling vehicles. They seem to be building this whole integrated experience for the Indian EV market. And this, I think, raises an important question for you, the listener, to consider.
Sure.
Well, given these ambitious expansion plans, the continuous innovation across hardware and software, and those rapidly improving unit economics we talked about,
Yeah.
how quickly do you think Ather Energy can truly reach consistent profitability?
And maybe more broadly, how quickly can they fundamentally reshape the perception of electric vehicles for the average Indian consumer?
Especially now, as more and more mainstream traditional players keep entering this incredibly dynamic market, something to mull over.